Imagine reaching the age of 30 and never worrying about monthly bills again. Financial freedom means your investments and assets generate enough income to support your entire lifestyle. In America, many young people follow the FIRE movement. Financial independence retire early focuses on aggressive saving, smart investing, and creating freedom much earlier in life. The first step toward financial freedom is knowing your target. Without a clear destination, building wealth becomes confusing and much harder to achieve.
Many investors use the 25 times rule. It helps calculate the amount of money needed before investment income can fully replace work income.
If yearly expenses are $40,000, reaching $1 million invested could become the target for long-term financial independence goals. The 4% rule suggests withdrawing a small amount every year while allowing investments to continue growing over long periods of time. People chasing early freedom often save 50 to 75% of income. Discipline becomes more important than temporary comfort and luxury. This strategy is called lean FIRE. The idea is reducing expenses today so financial freedom can arrive years earlier than expected. Others choose fat FIRE by building larger investment portfolios designed to support a comfortable and luxurious lifestyle after retirement.
Barista FIRE gives flexibility. Investments continue growing while part-time work covers smaller expenses and creates a more balanced lifestyle.
Saving money alone is rarely enough because inflation slowly reduces purchasing power and weakens the value of idle cash. That is why many Americans invest heavily into low-cost index funds, tracking the broader stock market over long periods. Historically, these investments have created strong returns and helped investors build wealth steadily through patience and consistency. Compounding works like a snowball effect, where returns begin generating additional returns and growth accelerates over time. Tax advantages also matter because reducing taxes means keeping more money available for investing and future growth.
Real estate becomes another wealth-building strategy because assets can appreciate while simultaneously generating consistent rental income.
House hacking allows someone to live in one space while rental payments help reduce housing costs significantly. Over time, rental properties can build equity, create cash flow, and support long-term financial independence goals. Expense reduction has limits, but increasing your earning power creates opportunities for much faster financial progress.
Many people develop high-income skills like coding, digital marketing, or data science to increase long-term earnings.
I got the tech job offer! High-value skills can dramatically increase income and create more opportunities for aggressive investing at an early age.
Many Americans also create side businesses and use extra profits to accelerate investment growth and future wealth.
Instead of spending additional income immediately, successful people often direct those earnings into appreciating assets.
Managing debt carefully matters because high interest payments can silently destroy long-term financial progress and growth. Financially disciplined people avoid carrying expensive debt and focus on keeping their financial systems healthy.
Reducing debt early creates more opportunities for investing and allows money to build assets instead of liabilities. Geo-arbitrage means earning strong income while living where costs remain lower and savings rates become much higher. Many avoid lifestyle inflation and resist increasing expenses every time income rises throughout their careers.
Every salary increase becomes additional investment fuel rather than creating larger financial burdens and unnecessary expenses.
Financial freedom before 30 is not magic or luck. It comes from consistency, smart investing, and repeating disciplined actions over time.